Hi everyone, how are you? Are you ready for a jammed-packed session? Then get your notebooks, your papers, pencils, coffee, drink, popcorn. Bring it all. I'm going to focus on long-term investing. I'm going to highlight the complexities and fears regarding investing based on the input of others. This is why I am starting with the basics, discussing generically. You will see how one stock can be used to explain everything, and by including more equities, the issue becomes more difficult. I can't explain all this in a short video, hence my series approach. Maybe, just maybe, this video will go viral, but it probably won't. It could be because the title or the thumbnail. I don't think it's due to the content, not this time. Maybe I need to change my thumbnail and the title to something like this. I thought this video would do better. Making these videos for people is a long-term event, just like language learning and investing.
Hello, Louis. I missed you. I want to read you this story with English being. I think you will love it.
Okay.
Hi, Louis. You miss me so much. Now I'm gonna tell you.
You miss him or you already miss him? Who miss who?
I miss him.
Okay.
I'm gonna tell you a very
Yes, that was my friend Princess Lily from the last video. And yes, I miss her as well. This is what the stock market does regularly. This is one stock over a period of 17 years. You can see rises, falls, flats. We'll call them dips. This is just one. This reflects, you can show, as I said, with this one stock, everything that you need to for teaching, for learning. This is what the market does daily. It's what the market does over a long period of time for the 17 years. How long is long term? 1+ years in the US. This is based on taxes. 1 year. So all I have to do is invest for 1 year. You saw in the last chart, no. You'll see in the future, no. So it's just for tax purposes. It could be 1 year, 5 years, 10 years, 20 years. What do you do? Remember, there are strategies and terminologies. This is a 17-year period. In this, you can see many long terms. Here's the 1 year. Ah, yes, you can make your money. That's lucky. Would you sell? That's for another discussion. You can see the 4.5s. These are pretty much flatlined, same as you put in. So you've invested your money, and if you were to sell, you come out with the same thing. Again, we're talking long-term. Selling is another video, and you could see towards the right-hand side, negatives. You would lose money if you sold. Long-term. Keep all of this in mind as we go through. When would you buy? When would you sell? How long? Would you have bought during this phase from, say, 85 to 87? Keep this in mind. When I say buy, would you have also sold in this time? The market, all markets, are falling because of the virus. It's a world economic situation and not related to a particular market. While I am discussing using for the most part a lot of the one stock from the US market, this is worldwide. You'll see why later without any problem. This is the Brazilian stock market. You can see the drop. The Deutsche Bank, Italy, carefully modeled, blown to pieces. The European, U.S. stocks. Correction? A correction? It may act like a correction, but I wouldn't call it a correction. Does a correction in the European market, for instance, affect the U.S. market? Besides, this will fall under strategies and terminologies. By the way, I also found an article talking about a 30%. Is that considered a correction? Or maybe they're going to call it a bear market. It appears terminology such as a correction can be applied to incidents like the coronavirus. I can understand this in the future when looking back, but not at the present. For example, in 2015, yes, I know, it's way out there, but I didn't want to have to try to address this in a few years based off of being in a bear market or the correction still, say, taking place. You can say when you're in 2050 and you reflect back the correction of 2020 or the bear of 2020. But then when you do your research, when you're discussing it, you'll tell the indicator was the coronavirus. Then it's different. Because the coronavirus is no longer in existence at that time, you're talking about the stock market. Then it's a correction and the reason for the correction. Don't rule out a 50%. Oh, and I just said 30%. This article here, I like it. Even if you think the 50%, this doesn't bring fears into you. It tells the truth. We are going to have a recession. We're going to have it. It's okay. It talks about anyone's guess. Yes. This also mentions that this recession is not calculated into the stocks. Just like thrown out the window. There are 4 ways, as the title says. I'm only putting in 2. You can read the articles if you so desire. I'll have them posted later. What do you think when you read this article? Me? It doesn't help. Am I a seasoned investor? I would say yes. So if it doesn't help me, what is it going to do for those entering into the market? What's it going to do for those that are novices, that are beginners into the market? Even buying Apple on dips caused by a couple of bad quarters might be. May or may not hamper. It appears. These are just terms used. And this is Apple stock, as you can see. So keep Apple in mind as we go through here. It just so happens I chose this 2 years ago to start, and that's the reason why I'm continuing to use it. It has nothing to do with these articles, but it does come in handy. The title says, long term, still shouldn't buy the dip. We just read a little bit about the dip earlier. What does that mean? And not only is it in the title, but it's in the article. March 2nd. March 5th. Investors should buy. One says don't, one says they should. Are you confused? I am. What do we do? Flip a coin. Yes. Okay. Heads or tails? Should she have invested? Why or why not? Did you invest? Why or why not? Here is the chart from that time. So 5 months after investing, it was up at 320. Then, as you can see, in a short time period, we've lost what? Almost $60, $55. It's a pretty drastic drop. Again, buying, selling, long term, 1+ years. Remember again, hindsight. Oh yes, it would be a good purchase. Then you could sell. Well, we're not talking selling. Keep this in mind, because selling is another. And a question I would ask you using this slide. Well, did you know it was going to drop? I seriously doubt it. So you now lost $60, as a for instance, $55 in just a short time, maybe 2 weeks. Why would you have sold at 320? And then would you buy back? Remember this chart. There's many long terms. There's many times to buy, sell. Apple. The previous slide was Apple. We're looking at 1997. Say to 2002, it appears that the price is about the same thing. If you go back to the previous slide, starting in 1980, the first 17 years, you wouldn't have made money, it doesn't look like, unless you sold. Why would you sell? Here's another good example. Would you sell in 1999? Would you sell when it's going down? Then when would you buy back? When would you buy back? This video is all about buying back. So from 2007 to 2020, you can see a major increase. Do you miss out on this because you held out? Because of the dips? 2,000 points. A corona stock market correction. Apple. Look at this stock. What do you think? Buy. If you would have bought in, say, 62, 64, in that period, look at the amount of money you could make, say, in 1999. So you buy, say, around 1997. It goes up. It comes down. We're talking only buying. Why would you sell? I personally, everybody's going to expect it's going to go up again. It does go up, but then it drops. I showed you this because this is a totally different stock, a very, very reputable company. And see where it's ending up? This is long-term investing still. 2009 to 2017, that is a good period. You can see it's a rise. Buying in the dips. What do you do? When do you buy the dips? I put this in here really just for my own well-being, for reminiscence, because Monday, March 9th, marks the 11th anniversary. Now, we're getting close to a bear market. This is a good time to think. Do you think we're going to enter into a bear market? Are we going to continue with the bull market? Me personally, I'm thinking we're going to go into a bear market. Why? Because of definitions. How long will the bear market last? Well, it may only last about a month. But from a paper standpoint, a newspaper articles, it takes you out of the bull market, puts you into the bear. It may be the shortest bear market you ever had. This is the reason why to use bear markets and corrections at the present moment, I think it's kind of funny when it's a coronavirus. Nobody thought this was going to happen or expected this. Notice the title. More often than not, history shows it's a good idea to buy the dip. So buying the dip isn't a sure thing. I already showed you that. It's not a sure thing. Long term, etc. This is a very good article. I do like this article as well. There's one thing to remember. The market will bounce back. That is true. History tells us it will. It doesn't necessarily say when, but it will. The problem is that does not mean a stock will bounce back. The market will bounce back. That does not mean a stock will bounce back. Strategies, terminology, fears, long term. Should you invest now or later? When? When to buy? When to sell? Thank you very much for showing up. I hope you got a lot out of this video. I got a lot making it. I showed you why, as I said at the beginning, the complexities. And oh, by the way, let me mention, she should not buy the stock. She should not have bought it based on what I've shown you. You now have enough information with this current series to show you why she shouldn't. We're only talking one stock. We're talking long term. There are other factors that can be brought into here, many other factors that can be brought into here to show why you might can, but not everyone. Thank you. See you the next time. Ciao.